Am I talking by myself?
Yes.
Oh yes. Okay, I thought. Okay, what's the code for the course?
SCC
ACC
1101.
1101.
Right lah ni. Alright. Alright, so this is a tutorial. Okay, I think there are 7 questions. So if you have done the question, then we can go quickly. Alright, so we can finish the 7 questions because your midterm we also have some kind of this kind of question, yeah. Can we have the tutorial now? Alright, question number 1. Okay, just a quick revision on your PPE is that property, plant and equipment is when you acquire the asset for the purpose of usage that will benefit economic resources to the company for more than 1 year, right? So remember that you purchase the asset and you are going to use the asset for some years depending on the useful life of the asset, and then at one time you may want to dispose of your asset. All right, so then you have to do the recording upon acquisition, during the usage, which is the depreciation, and upon disposal. Right, so let's look at the question here. First is that question number 1, Strike Bowling installs automatic scorekeeping equipment with an invoice cost of 180,000. The electrical work required for the installation cost is 8,000. Additional costs are 3,000 for delivery and 12,600 for GST, right? Goods and service tax. And this GST is a refundable as Strike Bowling is a registered GST registered. During the installation, a component of the equipment is carelessly left on a lane and hit by the automatic lane cleaning machine. The cost of repairing the component is 2,250 ringgit. So what is the cost of the automatic scorekeeping equipment? So in this question, you have to look into the decision whether how to decide on the cost. All right, so remember that in the first class, for example, we mentioned that to decide on the cost, or not only the cost, in this case, the invoice cost 180,000, but you also have to look into other costs incurred including the installation cost incurred to put the machine into its use. Yeah. And remember that the cost, there are 2 types of cost, is the capital expenditure and also the revenue expenditure. Yeah. So the capital expenditure is what we call the cost that will be capitalized, right, on the asset. But the revenue expenditure is the one that you charge in your profit and loss account. So in this case, what would be your cost of the scorekeeping equipment? Nurul Ain. What's your answer? Nurul Ain, are you here?
Yes, madam.
Okay. What is the cost of the machine?
191,000.
191,000, which is made up of 180,000, which is the cost, invoice cost, plus the installation cost 8,000, and plus your delivery cost of 3,000. Yeah. What about your GST? All right. The amount of GST paid for an asset is actually not the cost. It is the cost. It's not a cost, but because that is actually what you pay to the government, right, for the asset. So that GST or any tax that you pay is not actually included in the price of the item that you purchase or the asset. Yeah. So in this case, your I think that, all right, the total cost is your purchase price, installation cost, your delivery cost, and total is 191,000, your repair and GST. So you have the repair here of 2250. This is what we call revenue expenditure. It's for the maintenance. Yeah, even though it could be, right, the first time that you incur, but it still is fall under maintenance, repair and maintenance. So that would be the first 191,000. All right. And then question number 2. A new
Madam,
machine. Yes.
I have question for
Yes.
the cost, service and tax. We will
Uh,
put the amount on service and tax, right?
uh-huh.
Okay, that's all my question.
Sorry, what was your question again?
The amount of goods and service tax.
Yeah. So this one is 0. It's not included. Yeah. So it's not included
Right.
as part of the cost. Because
Right.
GST, you pay GST, of course, as a customer, you have to pay GST, but the payment of GST is not to the supply. You pay to the seller, but the money actually, seller is just collect the GST on behalf of the government. So they will have to pay that amount collected on the GST from the customer and pay that to the government. So it does not belongs to the seller, and that is not actually the cost of the equipment. Does that answer your question?
Yes, madam.
All right, question number 2. All right, in question number 2, remember that there are several methods for you to compute the depreciation of an asset. All right, so the first one is what we call the straight line basis. And you have the production. In this case, we have the product units of production. And the third one, we have the diminishing balance. All right, so here we have a new machine that costs 120,000, has an estimated useful life of 5 years and an estimated residual value of 15,000 at the end of that time. Yeah, so you can use it for 5 years and you have estimated useful life of 15,000. It is expected that the machine can produce 210 widgets, 210,000 widgets during its useful life. The company purchased this machine on January 1st, 2019 and uses it for exactly 3 years. During these 3 years, the production of widgets has been 80,000, 50,000 and 30,000 respectively. So you are required to compute or to calculate the depreciation expense for each of the first 3 years using straight line, units of production, and diminishing balance. So you are going to show me, all right, how do you actually compute the depreciation expense under the 3 methods. Number 2, prepare the journal entries for the depreciation charges under each of the 3 depreciation methods. So when you have a journal entries, in order for you to record depreciation, what are the 2 accounts that will be debited and credited? For your depreciation charges, which account is to be debited? Depreciation. Yeah, debit your depreciation expense, credit your
Accumulated.
accumulated depreciation. Very good. And then show the machine how it is presented in the statement of financial position as at 31st December 2020 under each of the 3 depreciation methods. So in this case, you have to show what is the cost. All right, normally we show the cost of the machine and then minus accumulated depreciation. And in this question, ask for 31st December 2020. When did you purchase the asset?
1 January.
Yeah, January 1st, 2020 here. So you purchase the asset and then the question requires you to provide 31st December. So how many years of depreciation is that?
1 year.
1 year?
2
1
years.
year or 2 years?
2 years.
2 years, because you have January 1st, 2019. So you have until December. So that is 1 year. And then you want December 2020. So 2 years of accumulation. So you have to show me the book value, yeah, later. Okay, so let's do the first one, how to compute a straight line basis. Remember, the cost of the machine is 120,000, right? And then 5 years estimated useful life, take that information, and then residual value of 15,000. So these 3 information is important, especially when you want to compute the straight line basis. And it is also estimated to produce 210 widgets during its useful life, right? So let's do the first one, straight line basis. So what are the information that you need? You have 120,000 minus residual value of 15,000 over life of 5 years. So how much is the depreciation per year?
21,000.
21,000.
let's see, yeah, it's 21,000 per year. So means that if you have 3 years, then you have to do for 2019, because the question asks for each of the first 3 years. So you have first 2019, 2020, and 2021. And as you know that the name is a straight line basis, all right, the depreciation will be the same for all the years. Yeah. Apa ibu ni? Is that clear?
Yes, madam.
Right? So this is how you do for the straight line method. It's very straightforward. Your cost minus your residual value over 5 years period. So it means that you have how many more years that you can depreciate the asset? You have 3 years here. So how many more years you can depreciate? No. 2 more years. Because remember you have 5 years here. So bila 5 year maknanya you akan depreciate over 5 years period lah. So 2019, 2020, 21, 22 and 23. Yeah, okay. So that is a straight line method. What about the second one, units of production method? Right, so you know that the cost is 120,000. You still take into consideration residual value of 15,000. And then you're going to apportion depending on the production of each year. So in this case, you have 80,000 in 2019, 50,000 in 2020, and 30,000 in 2021. So you're going to apportion this units of production, all right, over 3 years period, right? So let's see, for example, units of production, how do you get that 105,000? Anyone?
120,000 minus 15,000.
Yeah, the cost minus salvage value. Is it salvage value, residual value? Residual value, is it?
Yes.
So that is the cost minus residual value, 120 minus 15,000. That's how you get 105,000. So for 2009, how many units are you using? The unit of production is 80,000. So you apportion 80,000 over total is 210. Yeah, 210,000 widgets that you used for that for the whole useful life. Then you have 80,000 over 210,000 times by 105,000. 105 in this case is actually the cost minus your residual value. So for 2019, you get 40,000. Do the same for 2020, but 2020 you only have 50,000 units of production. 50,000 over 210,000 times by 105,000. Right? And then you get 25,000 for 2020. And for 2021, you have 30 units. So 30 units over 210. Why 210? That is the total machine production. Yeah, so you apportion the cost, or you apportion the cost depending on the number of units produced. All right, so that's how you get 30,000 over 210,000. Right, so I would prefer. Okay. But there's another way for you to do this unit of production, whereby you check or you compute the cost per unit. All right. So this is another way of using units of production, where you compute the depreciation rate per widget. All right. So you know that the cost minus residual value, which is 120 minus 15,000 over 210 total widgets. All right. So you will get the 50 cent per widget. Right, so you get this 50 cent per widget, and that 50 cent for 2000, in this case not 2018 is 2019, is 50 cent times by 80 widgets, you get 40,000. Here you also get 40,000. So it means that the answer will be the same. It's just that the method of calculation presentation is different. Yeah, the method is actually the same, but the presentation is different. Here for 2020, you have 50,000 widgets times by 50 cents. So you have 25,000. Here you also have 25,000. And the third one, when you have 30,000 widgets times by 50 cents, you have 15,000 depreciation. Here you also have 15,000. All right. If I were to call this is method number 1, this is method number 2. So which one do you normally do? 1 or 2?
Maybe 1.
Number 1. Anyone do number 2?
I.
You did, huh? All right. It's okay, but because both are acceptable, both give you the same results. Is that okay? All right. All right. The third one asks for a diminishing balance. So what is diminishing balance? It means like you have to compute the depreciation based on your book value. Not based on the cost, but based on the book value, or what I call net book value. Diminishing balance is the NBV method. Yeah. All right. So how you do that? All right. For diminishing balance, we have for 2019. All right. Because you only purchased that in 2019, the net book value is still 120,000 because you have not provided any depreciation. Right. So, but how you compute, because the rate given is 40%. Yeah. The rate given is 40%. So what you do is that whatever net book value, in this case, net book value is 120,000 because that is the cost. So diminishing balance does not take into account your, do you take into account your residual expenditure? Not residual expenditure, apa namanya? Residual value. I don't think so because you pakai percentage kat sini, yeah. So here 120 you times by the rate which is 0.4 or 40%, you get depreciation for the year of 48,000. Yeah, 120 minus depreciation 48,000, you get net book value of 72,000. And then 72,000 is the net book value for 2019. That will also be the beginning value of 2020. So using 72,000, which is actually derived from your net book value here, all right? So use that 72,000 times by 0.4, you get 28.8, right? And 72,000 minus 28.8, you will get 43.2. Yeah, so that is the net book value for the asset at the end of 2020. So 43,200 will also be the opening value for your 2021. You times by the 40% rate, then you get the depreciation for the year. So this is the net book value at the end of 2021. All right. So the amount that you need to record is actually the depreciation amount. Yeah, not the net book value. But it's just that how do you compute your depreciation? So that how it is lah, how you show the depreciation computation for diminishing balance. The other term called for diminishing balance is what we call reducing balance. All right, or we call it as apa ya? Aku tak ingat. What are other terms for diminishing balance? Right, so because diminishing balance is used by net book value, and the net book value will always reduce over time. So the depreciation also, the expense of depreciation will be lower. It's high at the beginning and then it gets lower every year. Right? Is that clear? Any question for the computation of the depreciation? Anyone? No question? You are very clear? Okay.
Yes, madam.
Very good. Then let's do the second one, the proper journal entries for the depreciation charges. Yeah, remember that just now the entries are your depreciation and your accumulated, but this one you have to record for 3 years under 3 depreciation methods. So how you do this? All right, for example here, instead of you have 2001, you can have it as 2019. Right, you can have 2020 here, and then you have 2021. So that is the 3 years that we do the computation. Right? So what under the first one is under straight line basis. So you have actually computed the depreciation under straight line basis. Now you want to record that in your journal for 3 years. So you know that the depreciation is 21,000 each year. So that's how you put depreciation expense for 2019, debit your depreciation expense and credit your accumulated depreciation. So that is for 2019. You do the same for 2020 and 2021. All right, because it's a straight line basis, so the amount of depreciation is the same for all the years. Yeah. But when you do your second method, which is the production number of units of production, so the depreciation is not the same. You have done the computation at the top here. You have 40,000, 25,000, and 15,000 for 3 different years. So you are going to record that 40,000, debit your depreciation expense and credit your accumulated depreciation. Then you put the same the 25,000 in 2020 and 15,000 in 2021. So that's how you record your depreciation, debit your depreciation expense, credit your accumulated depreciation. And finally, for your depreciation expense under diminishing balance, remember that the cost here is 48,000, 28,800 for 2020 and 17,280 for 2021. So you have debit your expense, all right, depreciation expense, debit and credit your accumulated depreciation. But it's just that the figure now is not the same. You have to plug in the figure from your own computation. Right, the one that you have just did just now. So you plug in the information and then put into the respective journal, right? And this is for 3 years, 2019, 2020, and 2021. Okay, so that is your for number 2. And for number 3, show how the machine is presented in the statement of financial position. So in your soft, right, you will see that you have an asset, or in this case, equipment, right? You have is under non-current asset, which is your PPE in this case. So the cost is always 120,000. Is it 120,000? Yeah, the cost, I thought it's 191,000. Mana dapat 180? It should be 191. Oh, this is question number 1. Question number 2. All right, the cost is 120,000, isn't it? Okay.
Yes, madam.
Sorry. So the cost is 120,000. So whether it's under straight line, under unit of production, or reducing balance, the PPE cost is all the same. It's just that how much is the accumulated depreciation. Remember that this one is for statement 2020. So if you look here, your 2020 means that under special accumulated depreciation for 2020, you only have 42,000. So you are going to record that as 42,000 as your accumulated depreciation. As a result, you have a net book value. So we call it as a net book value. Yeah, 78,000 for straight line basis. For unit pro, right, because how do you get that 65,000? Because you have these 2 years, which is 40 and 25,000. So that is the accumulated depreciation under what we call the unit of production method. So you have 65,000 and then initially it was 120. Now you have a net book of 55,000. But the third one, reducing balance, you see that the first one is 48,000, the second one is 28,800. You add these two together, you get 76.8. So your net book value is 43,200. All right. So is that okay with you? Statement of financial position. Saida? Saida, are you here? Omar Ashraf,
Yes, madam.
are you following?
Yes. Yeah.
Okay, yeah. You are the new student, right?
Yep.
Okay, that's good.
Alright.
What about other student? Mana Nazrul?
Yes, madam.
Are you okay?
Yes, I am following.
Very good. Okay, if you have any problem, just let me know. Just stop me.
Wait, madam,
Any,
just one
yeah,
question. I'm sorry for being a bit
it's
late,
okay.
but on question one, I didn't quite get what you said about GST.
All right. So the GST is actually what we call is a good service tax. All right. So when you pay for GST, actually you pay to the government. All right. It's not for the it's a tax. Tax is it should not be part of the cost of the. Of
It's
course, it can
just
cost you.
expense.
It is an expense to you, but it should not be part of the cost of the machine of
I
the asset.
see.
Mm.
Okay. Thank you,
Right.
madam.
And remember that because the seller they don't actually get the GST. So you have to record GST as a separate account.
And
Yeah.
then what about the repair one? Why does it
The
include in the
repair
cost?
is it falls under revenue expenditure, repair and maintenance.
So it doesn't contribute to the cost?
Yeah. Because the cost is the one that you pay to the seller, and any other cost that you have to incur to put the machine into use. All right. So, but what happened is that the machine is actually it was carelessly left on a lane and hit by the automatic lane cleaning machine. So the cost that you have to incur 2250 is not the original cost of the machine. It's the cost that you have to incur later, right? Because of the accident that you have to pay for that repairing. So that fall under repair and maintenance, which is revenue in nature.
All right, thank you, madam.
Yeah. So you will have other costs incurred while having the asset, or over the years you will have to pay. For example, you have a motor vehicle, right? You have to pay for the services, you have to change the tire. So all these are revenue, right? Something that is expenditure incurred in maintaining, in putting the machine into use. If you don't pay all this maintenance, then the machine will die sooner, right? So you have to pay all this. So that is what we call repair and maintenance cost. Yeah, and it's a revenue in nature. Anything else? Okay, let's go into your question number 3. Okay, February 2014, PPE acquired a piece of land in Gombak at a price of 2.5 million. Payment is made by cash obtained from a loan with a local bank, right? Okay, so on December 31st, 2016, the land is revalued. So revalued, it means that initially 2014 when you purchased it was 2.5, but now the value is 3.2 million. So you want to revalue your land. So the question asks for journalize the above transaction. So you have two transactions. One is the acquisition of the land. The other one is the revaluation of the land. Do you get that? Okay. So when you acquire the first one, when you acquire the asset or the land, so how are you going to journalize the entries? Right? So when you purchase land, your land is an asset, you're going to debit your land. What's the value of the land when you purchase?
2.5.
2.5 million. So you are going to debit land 2.5 million. And you're going to credit. All right. So how are you going to credit? Cash. Because you make payment by cash. So you buy the land and you make payment by cash. So you credit your cash. All right. So why is it not that can you credit a bank loan? In this case, we do not credit your bank loan because when you get the loan, all right, you did not get the loan in order for you did not get the loan. Bank does not pay the loan direct for the land, right? Bank give you loan and then the company use the money to pay for the land. So that's why in this case you credit your cash rather than you credit your bank loan. Is that clear?
Yes.
Okay, so that's the first transaction. We have question number 3. All right, you acquired the land, so you're going to debit your land and credit your cash. But when you revalue, all right, so what do you mean by revaluation? It means that now the value, instead of 2.5, now you have a 3.2 million. Right? So are you going to say that, okay, we're going to debit our land 3.2 million? No, it's wrong, because if you were to debit land 3.2 million, it means that as if you buy another land that gives you a value of 3.2, but actually it's the same land. It's just that the value has increased. Not the quantity, but the value of the land. So what you do is that you look at the difference between the revaluation value and the original value. So original value is 2.5 million and now it has been revalued to 3.2 million. Is there an increase or decrease in the revaluation?
Increase.
Is it a surplus or deficit?
Surplus.
It's a surplus. So it means that there's an increase in value. What's the increment?
1.3.
3.7.
How much?
1.3 million.
Where do you get 1.3 million from?
0.7.
0.7 only. Where get 1.3? Mana dapat 1.3? 2.5 increased to 3.2 million. So the difference is 700,000. Right? I'm not sure where you get 1.3. I pun dah pening dah. Mana dapat 1.3? Can you tell me where you get 1.3 from?
I miscalculate, madam.
Okay, thank you. Right? I'm worried that you see some other figures there. Right? So it should be 700,000. So now we are going to revalue the land. So land initially is at 2.5. Now we are going to increase the value of the land so that it becomes 3.2 million. So that's why we are going to debit land, but debit how much? We're only going to debit land 700 million. 700 million. 700,000. Does that make sense? Debit your land 700,000. And because we revalue, you're going to credit your revaluation reserve. All right? How much? Against 700,000. So the method is that we are going to have revaluation reserve. So in this case is that when we have a surplus, yeah, in this case we are going to credit. What if is I say that instead of it's a surplus, it's a deficit? All right, it means that there's a reduce in value. So if it's reduced in value, means that the value of the land is also has to be reduced. So that's why you're going to credit your land and then debit your, in this case, deficit lah, your revaluation account. Yeah. So if there is a deficit in revaluation, so that would be. But in this question is a surplus revaluation. So you're going to debit the land, increase the value of the land, and then credit your revaluation reserve. Is that clear?
Yes, madam.
Right. And then question number 3, B requires you show the extract of statement of profit and loss and other comprehensive income. So this is one statement, yeah. One statement, right? And then you have statement of changes in equity. So there are two statements that you have to show the extract. Extract means that you only show that part only lah, not the whole statement. Yeah, only the part that is relevant to the question. In this case, only revaluation of the asset. So for example, here you have statement of profit and loss and other comprehensive income. So whenever you have a surplus or deficit, it appears as other comprehensive income. Yeah, so you have profit and loss, you have the revenue, expenses, and then you have other comprehensive income. So under other comprehensive income is that you have a surplus or revaluation of land 700,000. So assuming that you have a deficit on revaluation, so you can have other comprehensive income deficit on revaluation land, but it has to be in a bracket. Why? Because deficit is an expense. Right, so you're going to have a negative there. What about your statement of changes of equity? Remember that revaluation reserve is part of the honest equity. Yeah, the changes in equity, the retained earning. So what we have here, we have balance on the reserve. Initially, we don't have anything, but now we create 700,000 reserve. So at the end, we are going to have, depends. If you have balance in the beginning, then plus your 700 reserve here, then you have additional. Alright, but in this case, they just put as adds, you don't show that. The information is not provided. So that's why we don't put anything there. We just want to show you that the revaluation reserve is reflected in the statement of changes in equity. Okay, right. Okay, now let's look at question number 4. Am I too fast?
No, madam.
Yeah. So at the beginning of January 2015, NNB purchased 3 helicopters, cost 1.5 million each, right? NNB needed the helicopter to cover the news more efficiently, pay 18,000 for a permit allowing NNB to fly helicopter in Malaysian skies. NNB had to incur additional cost of 60,000 to have specialty glass windows fixed on all 3 helicopters to reduce reflection from sunlight so that they could use their cameras to record the news more clearly from inside the helicopter. The useful life of the helicopter is 30 years. So take note of the information provided. So you have 30 years useful life. Cost is 1,500 each or 1.5 million each. And then you have useful life is, residual value, residual value. Yeah, so this is your residual value. How much is residual value? 2,160,000. And then what else we have? Sorry? Additional cost 60,000 here. Yeah, so that is information. What about the 18,000 permit? The 18,000 permit, is that a capital expenditure or is a revenue expenditure?
Is it revenue, madam?
Revenue. Why? Because permit is something that you have to pay on annual basis. Yeah. So you don't pay permit one time only. So it's a revenue expenditure. It's a recurring expenditure. So that's why it's not included as cost of the asset. So when you want to compute your depreciation, number one, you must determine what is the cost of the asset. So in this case, 1.5 million, you have 3. So 1.5 times by 3 helicopters. It depends, yeah.
Capital?
Sorry? Sorry? Capital? Yeah, we want to decide. Okay, I just want to say that sometimes, all right, helicopters here, you have 1.5 million each. All right, you can have 3 accounts. Helicopter 1, helicopter 2, helicopter 3. You have 3 accounts for separate helicopters. And then you provide the depreciation individually. All right, so that's one way. And then whatever additional cost that you incur for each of the helicopters will be treated separately. But in this example, all right, the answer shows that the helicopter is the 3 helicopters because they buy at one time, so everything is lumped together. So you have 1.5 million times by 3 helicopters, I think. Yeah. Mana dia question number 4. We have purchase price is for 3 is 4.5. The permit is not taken into account. It's a revenue in nature. And then the additional cost for you to fix the, I think that is the windows is 60,000. So that is part of the total cost. So now you have the total cost of 4,560,000. Okay. So and then using straight line method, so you don't have to think about other method. All right, you just use straight line method, calculate the annual depreciation of the 3 helicopter and what is the net book value, all right, at end 2015 and 2016 respectively. So let's do the computation first. Straight line method, we have 1.5 million times 3. And then the expected residual at the end of the year is for the 3 helicopter 2160. So this is another reason why they put together everything, the 3 helicopters as one. Yeah, because the residual value given is also for the 3 helicopters. So what you do, compute the straight line basis. So you have the cost is 4560 minus 2160 is your residual value. All right, and then you divide by 30, which is the number of years useful life. So from there you get annual depreciation of 80,000. Right, 80,000 per year. It means that you have for 2015, you bought into January 2015. So if the first year you have a cost of 4.5 plus 60,000, you have 4560. This is your cost, right? And then cost minus your depreciation for the year is 80,000. Now you have the net book value. All right. Okay, you don't have here. You put. Do you put? Is this how you show it? They want you to calculate the net book value, annual depreciation of the year. Okay, okay, let's not make it. Okay, let's make it like this: common X, common V. All right. So what I want to show you is that this one is accumulated depreciation, right? So this one is more. Right, so this one is this, but this one is this plus this. Okay, cost will always be the same. Yeah, right. Command C, command V, tak boleh. Command C, command I have to special value. It's special values. Alright. The cost is always the same, 4560, but the depreciation per year is 80,000. Accumulated depreciation is 80,000. Now net book value is 4480. Kenapa dia tak jadi ni? Accumulated depreciation plus this one plus 960. This one accumulated. You get the same answer?
Yes.
Betul tak cara I buat? Is it the right way of doing it? I think it is. Okay. Hold on lah. Cantik pula. Okay. Dah lah tulisan semua tak sama ni. I cannot, you know. Dia besar jadinya. Okay, dah lah. Ni macam. Okay, so that's question number 4. Is that okay? What time is it now? 2:47. Okay, let's go to question number 5. Wow. Wow. Okay. Below, okay. Get used to this kind of question, yeah. It could be in your midterm. I do not know. Below is the trial balance, which is the extract. So it means that when you have trial balance extract, it means that it's not the full trial balance. It just take the part of the relevant information to you. Yeah. Of way forward berhad as at December 2016. So you have PPE of 840,000. Accumulated depreciation is 240,000. Cost of sales to 268,000. Admin cost 154,000. And distribution cost 110,000. Additional information is that further details regarding the company's PPE. You have a freehold land, fair value is 300,000. All right, there's no accumulated depreciation for land. Why is that? Why don't you provide depreciation for your land?
Land always appreciated.
Thank you. Very good. Yeah. So you don't have any depreciation because land appreciate in value. So there's no depreciation method provided for the land. The building fair value is 240,000, accumulated 70,000, straight line method 2% per annum. Right, and then machinery is 210, accumulated 150,000, units of production method, estimated units is 60,000. Motor vehicle, you have 90,000, accumulated 20,000, using diminishing balance method 25% per annum. Depreciation is to be provided based on a month of ownership basis. So this one careful, yeah, because in this case it's clearly mentioned that month of ownership basis. So you have to look at when do you actually own the asset on a monthly basis, yeah. So because the depreciation will be computed based on a monthly basis. During the year 2016, company production is 7,200. So it's given that for the motor vehicle, for the machine, all right, 2016, 7,200 units. October 2016, company purchased a new motor vehicle. So you have new motor vehicle. Cost is 160,000. Has not been recorded. So you have to record the purchase of the motor vehicle. All right, this one because it's not mentioned, so you can assume it's by cash. On December 31st, 2016, the freehold land was revalued to 380. Surplus or deficit revaluation?
Surplus.
Plus.
It's a surplus because initially it was 300,000, now increased to 380,000. This one is the motor vehicle. All right, so what you're required to calculate the depreciation of building, machine and motor vehicle for 2016. Right, and then 2016. And then generalize the above transaction and show the extract of statement. Profit and loss, all right, so you need the profit and loss extract. And then financial position. So there are two statements that are required here. All right, so let's do the first one. Okay, remember that whenever you have accumulated depreciation, then it means that you have already purchased the asset in the previous years. All right, it means that it's the building, the machine, motor vehicle is already in the business. All right, it's not new, so you just continue providing the depreciation. Building is 70%. How you compute 240,000? There's no residual value provided, so that will be the cost. 240 times by 2%, isn't it? Where is question number 5? So you have compute the depreciation first. Building 240,000 times by 2%, so you get 4,008. So 4,008 is the depreciation for building in the year 2016. So you have not provided that yet, yeah? So you're going to generalize this entry later. For the machine, all right, 210 fair value, production is 60,000. There's no residual value, so 210,000. How do you do that? For 2016, you have 7,200 units. So 7,200 over 60,000 times by 210,000, isn't it? So you have 7,002 over 60,000 times by 210,000, which is the 210 is the cost. Yeah, all right. All right, so you get 25,200. Are you following?
Yes, madam.
Anyone not following? Okay, yeah? Right. So the machine, remember that the machine using the production of 60,000 units of production method, yeah? So this is the method that you have to follow. Right, this one is 2% straight line. And the other one is a diminishing balance. So diminishing balance method, let's look at the diminishing. So you have motor vehicle 90,000. Accumulated depreciation is 20,000. What would be the net book value? Of the motor vehicle. What is the net book value? 70,000, right? So motor vehicle 70,000, that is the net book value times by 25%. 25% is the rate given. So you have 70,000 times 25%, that would be your depreciation for your motor vehicle. But then you also have this new motor vehicle. The cost is 160,000, and because this one motor vehicle always use diminishing balance method 25%. But remember that it says that kat mana yang kata where is it? Alright, 160,000 because this one there's no net book value because it's a new motor vehicle times by 25% lah, right? 25%. But kat mana I see the month of ownership basis, yeah? So if you month of ownership basis, you have to look at how many months you own the asset. So for the motor vehicle, you purchase in October and your year end is 31st of December. So always refer to your year end here, right? 31st December, it means that you purchase October, November and December. So there are 3 months there. So you're going to apportion. So the 25% is per annum. So but you only purchase that for 3 months. So you're going to apportion 3 over 12. So 160,000 is the cost, 25% is the rate, 3 over 12 is the ownership period. Yeah, 3 months only. So then you get 10,000 for the period. It means that the depreciation for the new motor vehicle is 10,000 for 2016. Are you following this one? For the new motor vehicle, you have the cost of 160, you have the rate 25%, but because you only own the asset for 3 months in 2016, apportion 3 over 12. Why? Because the 25% here is for per annum. Right? When are you going to use, whether you want to apportion or not, depends on the question, because it depends on the policy of the company. Some companies will just take for the whole year depreciation, even though they purchase in October or November, right? But other company, their policy may be based on the ownership period. Yeah, so that's why you have your 10,000. All right, so you have done the depreciation computation for those your building, machine, motor vehicle, new and old. But there's another one, we have freehold land to be revalued, 380,000. So it's revalued upside, so it means that it's a surplus. So going to increase the value of the land by 80,000. So you're going to debit your land and then you're going to credit your revaluation reserve. Okay, so the journal entries, of course, you whatever the depreciation that you have computed, right? What is it? Motor vehicle. Oh, this one is the new motor vehicle. Right, your new motor vehicle you purchase, so you debit your motor vehicle and you credit your cash. So is that clear?
Yes.
And then depreciation, then you all have to do depreciation for each of your asset that you have computed. Right, for example, depreciation for your building 4,800, and then you credit your accumulated depreciation for your building. Debit your depreciation expense for your machine, credit your accumulated depreciation for your machine as well. Yeah, 25,200. How you get that figure is the one from the one that you computed lah. Right, and then you have that 17,500 they put together, yeah. Motor vehicle old and new ni they put under one motor vehicle. So it means that you have two, what is the cost of the motor vehicle now? You have old 70,000 and the new is 160,000. But the depreciation is total 17,500 plus 10,000. So you have 27,500. So you have the depreciation for motor vehicle 27,500 accumulated. And remember that you also have the freehold land surplus, all right? You revaluation, debit your land, credit your revaluation reserve. Okay. So this is when I say that, all right, given if you are required, all right, so whatever you have here, all right, put that into the respective financial position. All right, you have PPE of 840 And then, but you have to show that 840, this is the trial balance. So how you show that? Statement of profit and loss account. Okay. Okay, you only have cost of sales, admin cost, and distribution cost. So but what you have computed is on the surplus, is on the depreciation, right? Where's the journal entry just now? So how are you going to reflect that in this item only? I thought I saw it somewhere. Where is it? You have cost of sales. Cost of sales here 268,000. What is 268,000? So that is the initial. All right. So I would say if I were you, remember I told you that this is your command C. I would put it here. Command V. Right? Command C. Command V. Apa tak boleh? Kenapa tak nampak ni? Okay, cost of sales. Initially you have 268,000, all right? And I remember somewhere it says that the depreciation is to be recorded in the cost of sales. Is that where do I see the information? So how are you going to reflect that? So initially you have 268 and then you plus your depreciation. We have, all right, then in this case you have to decide, all right, I put it here. You have to decide if it's the building, all right, where are you going to put that into? So if building is the admin cost, right? Because the building is used for admin purpose. Machinery is the cost of sales, right? This one is based on logic, right? But the motor vehicle is for distribution. Does that make sense? Distribution. Okay, so when you have for example, for the building, right, cost of sales of the building, it means that initially you have 268. So when you have motor vehicle 160,000, this one does not involve your does not SOPL, right? So for the building 4,008, all right, depreciation on building. So this one, it means that this one is part of the cost of admin. Right, you have depreciation for your building. So that's why you are going to add 4,008 under admin, 4,008, 4.8. Right, and then you have, are you following what I'm doing now?
Yes, madam.
Because why?
Yes,
Because the
madam.
accounts only have three types of expenses here: cost of sales, admin cost, and distribution cost. So how are we will have to decide. You only have your depreciation cost just now. So but where are you going to put that depreciation cost? Right under here, the depreciation expense too. So that's why I say that if it's a building, it means that normally building is for admin purpose. So that's why we put the depreciation for the building under admin cost. Alright, but for the machine, you use it for production purpose. So that's why the machine I put under cost of sale, because that is the, you generate, you have the manufacturing. So the cost of sales, depreciation for the machine is under cost of sales. And the distribution cost, we have the motor vehicle, which is used for distribution. So we are going to allocate the depreciation expense to the respective account. So depreciation on machine, I would put this as cost of sales. Right? Then we have that depreciation. And for motor vehicle is cost, distribution cost, is it? Right? Depreciation cost, admin cost and cost of sales. I put admin cost apa? Cost of admin. Padahal nampak lain macam je.
Madam,
Yes.
so we cannot just write like a depreciation on motor vehicle. We have to enter into the admin cost.
Yeah, I believe it's like that because kalau you nak letak, because this is how, this is normal under company where they put together similar costs together lah. Alright, so it's just for presentation. Katalah assuming that you have depreciation at the bottom pun, I think it's still acceptable at your point lah. Alright, but later when you go to a higher level, then you have to categorize the cost accordingly.
Okay.
So if you were to have your depreciation for building, depreciation for machine, depreciation for motor vehicle, I think that is still acceptable because the instruction is also not so clear in terms of the presentation of your answer. Yeah. So, but I will, because here I see that here I want to see why do you get that, right? So for example, here we have the 4.8 is the admin cost. 25.2 is the cost of sales. So that's how you have 25.2 there. Right? And then the last one we have distribution cost is 27.5. So that's how you get that figure, right? So that's as I mentioned earlier, that's how in your exam, if you can show me something like this, so now you know that, oh, the total now you have that. Okay, but in your exam, the more important is this. You have to show me these two items, right? If you don't show me the total, it's still okay, but show me these two items. Do you get that? But of course, you need to know the total lah in order to for you to compute the full financial soft item lah. And then, alright, this one, and then you have your surplus, and this one is new lah. Alright, other comprehensive income, because of the surplus, you have credit your surplus on revaluation land, so you have that 80,000. Okay. Is that clear for your statement of profit and loss? Okay, then for your financial position, right? You have your non-current asset. Remember, you have the freehold land, right? So that's why I say that if I were you, I would put it like this, right? I will have my PPE. Oh, dipecahkan. Sini ada 840 kan? But here you separate it, open it, right? Freehold land 380,000. Building initially it was you don't have it here. The building, all right, initially it was 240. All right, building okay lah. But the freehold land, all right, you remember that you revalue. So initially it was 300,000, but now it becomes 380,000. Building 240, and then the accumulated depreciation initially it was 150,000. Machine, right? And then you add your, during the year you have another 25,200. Okay, and then for the bukan 25. Machine. Initially you have 210. Ni tak nampak ni. Betul lah. Machine 210, and then you have 150,000. plus how much is the machine? Depreciation for your machine? 25.2. So that's why if I were you, I would just do like this. Initially it was 380,000 and then I add another 80,000. Remember your journal entries? Excuse me. Oh, sudah dah hang. Okay. 30,000. You do not want that 0 at the back. Apa tak boleh ni? Nice. All right. For the building, there's no change to 40,000. For your accumulated, initially it was 150,000, and then you add for another 25,200. But remember that 25,200. Remember that your accumulated is always negative because it's a contra asset. So don't forget to have the negative figure here, right? And then what else we have? Machine, initially it was 210. You do not buy another. So there's no change, but the
Madam.
Yes.
Accumulated building, is it 150, not 70?
Hold on. Accumulated building. Okay, sorry, 70,000. So where's the building? Accumulated, sini ya, minus 70,000, isn't it?
Yeah, yes.
Mana dia accumulated? Ni, here, minus 70,000, isn't it? And then, building admin cost depreciation is 4,008, isn't it? So minus 4,800. Am I right or not? So I will just put here again. I just put here land. And this one is your building. This one is the accumulated depreciation for your building. Am I right? This one is your machine. This one is accumulated for your machine. How much is the accumulated depreciation for the machine? Initially, it was 150,000. Remember, it's a bracket, 150,000. And then during the year, you add 25,200. And then what else you have? Motor vehicle. Initially, you have, how much is the initial? You have 90,000, then you purchase another 160. So you have 90,000, and then you purchase another 160,000. What about your accumulated? For your motor vehicle, initially it was 20,000 minus 20,000. Then you add another. How much you add? I think that is 27,500. Yeah, this one, yeah. The motor vehicle, the new and the old. So during the year, you have additional 27,500. 7,500. Okay. So once you have all these, then only I put in what is the total for all. Right? Apa tak nak ni? Okay. So you have this total, then you pull down je lah. Okay. If there is no change, then you don't have to put in the value. Right? So these are the adjustment. We call this as adjustment. So this one is the balance.
Madam, building 48,000.
Building
48,000.
initial 48,000 tu apa?
Depreciation. Madam tulis 4,000 lepas tu.
Oh, tak cukup 01. Right. Is that okay?
Yes.
Alright. So this is the ni lah. You can have it presentation if you want to show this one is the net book value. If you want to show the net book value, so you can show individually. So this one is actually the sum because you want to separate your land and building, right? So the building is actually, this is the net book value. From here, command C, command V, command V. Right, so total asset here is apa tak ni? Total kenapa tak sama? 739,300.
Accumulated depreciation building is 44,800.
Kenapa dapat? Hold on. Again, accumulated building 70,000. Initially it was 70,000, right? And then we provide another 48,000.
Madam salah madam. 4,800. Sorry madam.
Alright. So sama tak? 782. Boleh sama. Okay. So this is just a presentation. Alright. You can have it like this. Right. Either way, I don't mind. Alright. As long as you get it right. Whether you want to show it on this method, alright, where you have the accumulation, you plus 150 plus 25,200. But I will always have, from the very beginning, I will start doing that. Alright, so this is your adjustment. Remember, in your midterm, you have this adjustment. Right? So this is the net book value of the asset. Yeah? In this case, is the PPE. Does that make sense? Which one you like? Okay, I call this the first one, which is you normally do. I do not know. And this is the second method, which is my method. I don't know, not my method lah, but what we have been using here lah. Whichever that you think that you are familiar with, alright, you just carry on lah. Macam ni kan, accumulated depreciation building, ni mana dapat 150,000 ni? Huh? Can you tell me?
Kiraan machinery.
Machinery kenapa 150 kat sini? Dia salah lah ni. So maknanya it's supposed to be 70,000, is it? 70 plus 20, tak juga. Apa ni ya?
Tu sebab, madam tu sebab tambah the straight line of depreciation kan.
Okay. Depreciation for the building is mana building? 4,008 je. Ni patutnya kat sini 4,008 je. Alright, dia typo mesti. Betul. Machinery dia tak tunjuk pula. Machinery should be how much? Initially it was 150,000 plus 25,200. Betul. So you dapat 175,200. Your motor vehicle accumulated initially was 20,000 plus 27,000. So you get, right? It's just that they don't show you the working well. Okay, so either way you should get the same. But entah, I nampak I punya lagi more, I do not know, short sendiri. Alright, I like mine better lah. Okay. Alright, Anything that you are not clear? You better ask me, okay? Friday, your midterm, ada benda ni, This will be covered in your midterm exam. Alright. Then let's do for, okay, this one, question number 6, what is the time now? We're supposed to have 1 minute je left. So how? You do question number 6, yeah? So you have freehold land, machine, motor vehicle, accumulated. Alright, this one is production. And then you purchase a new machine. Ada 2 machine, new machine, and then machine is production units and motor vehicle straight line basis. So take note of those information, yeah. And then remember that it's an ownership basis, so you have to apportion the number of months you own the asset, 0 residual value, and then you have full life of 8 years. Okay, ada revaluation again, 240,000. Calculate depreciation, journalize transaction, show PPE presented in your financial position. Explain how depreciation expense should be classified in the statement of profit or loss. Explain how depreciation should be classified in the statement of profit or loss if the company classified it expense by function. So that's how, this is what we have just now lah. When you classify expenses by function, whether it's a distribution, whether it's an administration cost, or whether it's a cost of sales. Yeah, so you have to explain how are you going to classify depending on the usage lah. Okay. So this is similar. I think that this one is more on the unit of production. Similar. Yeah. So please do question number 6 and 7 as well. All right. Make sure that you do all these questions before you sit for your midterm on this Friday. So in the next class, I will cover your intangible asset will also be in your midterm exam. Is that clear? But there's not much on intangible asset. So hopefully you finish this. If you have time, we can look into question number 6 and 7. Is that okay?
Yes, madam.
Right. Okay, I think that's all for today. It's already 3:20. Don't forget to fill up your attendance form and then provide comments so that we can start.